Welcome to the Sushi Swap Onsen AMA, where we bring projects that have partnered with the Onsen program and give them a platform to reach a larger audience. Today we are here with DeFi Ted and Cucumber from Ruler Protocol. Thanks for joining us.
Thanks for having us.
Thanks for having us.
Yeah, I'll start off with a few questions to get this going, and then we can open it up to the audience in this stage here. Just raise your hand. There's a button at the bottom. You can answer your questions when you come up on stage and then head back to the audience. We've also got the AMA text questions channel, which you can find just below the AMA stage there in our server. And you can ask your question that way as well. And we'll hopefully have, like I said, Cucumber and Ted, if you can keep that open just to keep eyes on it, and that way you can see it. You do not need to message Pope in order to get one. They will come automatically. The bot is running. So please, no Popes in the AMA text questions. All right. Yeah. So Ted and Cucumber, if you guys don't mind, just introduce yourselves, give a bit of your background, kind of what you've been involved in before, and your current involvement with Ruler Protocol.
Sure, Ted, you want to start?
Yeah, sure. So my background is well over a decade of traditional finance and insurance. Have been involved in Australia. Have been involved in crypto for the last 4 years, and I went full time into crypto about this time last year during COVID, or the full outbreak of COVID, and being put out of work. So it's worked out kind of well in my favor. We started Ruler in, well, it dates back to when we started Cover as well. So we're going back to August, September last year. And then the conceptualization of that happened by the end of November, December. So that's kind of my very brief foray.
Awesome.
Cool. So yeah, I also have a traditional finance background, studied finance in grad school, and then I worked for a financial services company for a few years, got into crypto originally in around 2016, and then I started doing it full-time in late 2017. Originally with trading, I was writing trading bots. And then I got into DeFi last summer. Actually, farming sushi was the way I got into DeFi. And then I'd always had a few ideas for some projects, and I met some cool people that ended up being our team for both Cover and Ruler. And so we started with Cover, even though I'd had both ideas already, but Cover was the one that we did first because there seemed to be a product market fit. And I met Alan, and he was already doing the yield farming.insure. And so that, we've been working on that project since October or September of last year. And then Ruler earlier in this year, but like I said, we've kind of already had the idea, and Crypto, Pumpkin, and myself, we were really the genesis behind the idea, and we pitched it to the rest of the team, and we decided, hey, we wanted to build both, and that we think that both of the projects have a lot of synergies together. So that's basically our origin story.
Okay, great. Yeah, so it kind of the Ruler kind of came out from, I guess, from Cover, and there was kind of two ideas, I guess, together as one originally, or maybe just talk.
Yeah, they both use some of the same basic principles, which is that they use market-based pricing as opposed to a bonding curve. So like with Cover, the claim and no claim tokens, they're traded and they have a price just like the Ruler RC and RR tokens. That's the most basic similarity between the two.
Okay. Well, let's get into that. Let's get into the kind of this a full overview of Ruler, how it works. It might be a bit abstract and complex for some people, and maybe break down the RR and RC tokens while kind of doing this. Is kind of a bit to unpack here, but let's do it.
That's good.
Sure. Do you want me to just jump into it?
Yeah, we might. Well, how about we start with the RC tokens, Cucumber, in regards to kind of the who's using them and why.
Yeah, so there's the two token model. You have the RC token and the RR token. You can think of the RC token as just being the loan in token form. So it represents the rights to receive payments from borrowers in the future. Then the RR token, on the other hand, is what's required in order to make that repayment, but it also has rights as well, because when you make the repayment, you receive back the collateral. So in fact, the RR token can have a market value as well as the RC token. And the way it works is you mint both of them at the same time. And then if you want to be a lender, then you want to hold on to just the RC token. And if you want to be a borrower, you want to hold on to just the RR token. So in practice, we've automated a lot of these things behind the scenes, because you'll deposit your collateral, and if you want to be a borrower, you'll end up with just the RR token, and then you'll receive a stable coin as well. But what's really going on behind the scenes is you're minting both tokens, and then you're selling the one that you don't want for stable coins. So in this case, you're selling the RC token for stable coins, and that's effectively your loan. And then some lender ends up with that RC token, which represents a tokenized right to those future payments from the borrower.
And so your RC token, that is your collateral token. So that's the collateral that you're providing. So that would be the, whatever asset you're provided. So whether that's I think you guys have examples on with Wrap Bitcoin, or, if that's or Ethereum or whatever.
So that's actually the...
Go ahead, Ted.
Yeah, so I was just going to jump and say that's actually the RR token. So the RR token is actually like your hold on your collateral. So the depositing funds that you're using to borrow against, all right, will be kind of held there in portion with the RR token. And the RR token will equal the same amount of RC tokens that you minted to sell off for the loan, except when you sell the RC tokens, you're going to need to sell them for a discount, which is your interest, which you're kind of being charged up front, right? So the idea is that you're going to come back with that amount of USD plus the additional to make up for the amount of RR tokens you have. So if you want to think about it from just a very simple point of view, your RR token is like is like when you you go out to like somewhere for dinner and you hand over your coat and you get a ticket, right? You need that ticket to get your coat back.
Right. And so what happens if you don't have all of the ticket?
And you can't get all of your collateral.
So then you don't get a sleeve with your jacket.
Yeah, that's right. So we'll take the sleeves, we'll take the hoodie or whatever, but yeah, you're not going to get it all back.
Got it.
So you need to come back and make that RR token matching whole. So the two ways you can do that is either matching it with DAI in this instance, or you can actually unwrap your position by matching it with RC tokens you purchased back off the market. But that does come at a cost to unwrap of 0.3%. So you just got to be mindful of that if you're using that approach.
Okay. So
I want to jump in real.
Go ahead.
Oh, sorry.
Go ahead. No, do it.
I was going to just jump in real fast, because a lot of people have asked us, and I think there's not a lot of clarity out there about why we even needed the RR token in the first place. And it's true that we could have built the exact same functionality and just had the contract store who the borrower is and how much they've borrowed and what they owe, right? The reason that we wanted to have this RR token to actually track that you're the borrower and that you owe this amount is because now it makes even the borrowing side of things fungible and transferable. So if I'm the borrower, but I want to transfer my obligation to somebody else, I can now easily do so, right? By just transferring this ERC20 token. And so let me give you an example of why that might be relevant. Imagine you deposit some collateral and you borrow DAI. Then you go and you use this DAI for trading and you lose all the DAI in the trading. Well, you don't have DAI necessarily now to pay back your loan, but the collateral is still there. And it might be, in most cases, worth more than the obligation that you have to repay. So you don't want to just lose the collateral because you don't have the DAI to repay. What you can do is you can transfer the RR tokens to somebody else in exchange for the difference between the value of your collateral and the obligation. And then you don't lose all of that value. You're not forced to default because of that. And so that's a market that we hope to build out in the future, a way of transferring your loan obligation to someone else. And in traditional finance, you see this all the time, that people, they'll sell their loan to somebody else, depending on what it is.
So in comparable, what we all want to hear is like when they're selling junk bond or selling junk loans and things like that are just have completely defaulted. We're kind of creating that market here. Is that in a sense a possibility? No, maybe I'm getting too far down the rabbit hole there.
It's definitely not like a repo market. So, So it's not repos or anything like that. but it's just the ability to kind of transfer your debt where you still have value in the it's still positively valued to you. The next stage that we could do to help assist that in the future will be to automate that, where we can introduce kind of a flash loan and zap function where we could potentially exercise your position with the collateral that's within the contract and pay you out the difference.
Okay. Yeah. All right. Yeah. So with collateral, what kind of collateral types do you have right now, and what are kind of some of the conditions you've got with it?
So right now, the collateral types that we have on there are, we're running obviously with the key collaterals, which is ETH and Bitcoin. Obviously, they're the most popular markets around. We've also made sure that we've got X-Ruler and X-Cover looked after in our market as well, because that is obviously our communities, and we want them to have some use case there. And then we're strategically partnering with people. So what does that mean for us? So a strategic partnership is where we can actually build out a use case rather than it just being available, right? So it's nice that it's available. And if I remember listening to the forum that you guys were just on, a lot of people there were just saying, it's nice to be on L2, but what are we going to do there? There's got to be use case, right? There's got to be like some sort of this is why you're using it on this L2, or this is the use case for it. So what we're doing with Alchemix is we're utilizing the ALUSD as a pairing option. So that gives ALUSD some sort of use case within the ecosystem outside of it just being the borrowing mechanism for DAI in the Alchemix protocol. And in return, in return for that, they're able to then come and deposit their Alchemix and borrow DAI against it and continue to compound their rewards without actually selling off their ALCX. But they don't have a liquidation risk. They just have a mint ratio, right? So the worst case scenario is that it drops below that mint ratio and the lender picks up the collateral, right? Which means it's not actually a dump on the market. It's actually outside of the AMM market where you could just you market dump it. It's a predetermined price.
Okay.
So you still get made whole for it, at a resting limit order, but it's a way for those Alchemix users to kind of compound their rewards. And now we're working on that with Badger, with their IB BTC and their B Badger tokens.
Okay.
Let me add to that real fast, in that we're also working on making that process permissionless for the future, so that anybody will be able to add their collateral on Ruler. Now, one thing that historically, the Ruler model involves market prices, right? And so historically, the main challenge that the protocols face is simply how do we get enough liquidity so that market price can be established. And with AMMs, it was rather tricky. You typically needed to have yield farming rewards in order to make that happen. And so it wouldn't have worked to just list whichever collateral you want if you didn't also have yield farming rewards in order to get liquidity into the AMM so that market price could be established. But now that we're transitioning to order books, that should help things substantially. Because what you can do is then people can just put less resting limit orders into the order books at whatever price they're comfortable with. And there won't be as much risk to those limit orders to those LPs as there is in an AMM, where your only compensation is trading fees for your impermanent loss. So I think going forward, when we have this open system, permissionless system to list collaterals, that in conjunction with the order books, I think should work quite a bit better.
Is there timeouts or expiries on the limit order times?
So right now we're using 0x behind the scenes. So and yes, with a 0x limit order, you basically sign a transaction and it's valid for whatever the period you specify, and then after that the signature becomes invalid. So it can be, if you set the expiry to 10 minutes from now, it can be filled by anybody for 10 minutes.
Got it. And no limits on either side? As far as time limits?
In terms of size? No, there's no time limits. You can set it for as long as you want.
Okay, cool.
The biggest challenge that we've run into with using order books is that when you fill, you have to pay gas. And in addition to gas, you have to pay the 0x protocol fee, which can, it adds on. So.
Yeah, especially with
But placing the limit orders into the books does not require any gas to be paid. So that's one of the big advantages to the system. You just have to sign a transaction.
Right. So
only the taker pays, not the maker.
Got it. And so then, by having that strategically placed, people can actually I guess calculate better and say like, hey, I'm willing to, if gas prices are staying this low, or below this price, if my order fills it here, I'm happy regardless, even if, gas is, as long as it's under 100, with.
You can do as a lender or a borrower, you can say, this is the interest rate I'm willing to lend at. This is the interest rate I'm willing to borrow at. Mm-hmm. And then you can put in a limit order at the price that would give you that interest rate. Whereas with the AMM, you kind of just have to take whatever the market gives you, right? And you don't have as much control over that. And so what we'd often find is that the market would move to a certain price. You wouldn't like that price, so you just wouldn't interact with our protocol at all until the price moved back, right? Now what you can do is you can still just either place the limit order to buy using DAI or mint the RC token and place it in the books to sell at the price that you want and just wait for it to fill. And if it doesn't fill, it doesn't fill, but you didn't lose anything. You only lost opportunity cost.
Right.
So.
Okay. Wicked. So then touching on time and whatnot here, with the like expiry time periods for your loans, right now it's set for like for the month.
Yeah, almost all pairs are for a month. We've started experimenting with going a little bit longer out than that. Like last month, we introduced some pairs in the middle of the month that didn't expire until the end of July. Mm-hmm. But in general, with our current model, we need to keep those periods relatively short because otherwise there's an option component to the pricing of our loans, which is a put option, in fact. Mm-hmm. And the longer that expiry goes, the greater the time premium on those options gets, which will then start making the cost of the loan more than just interest. It'll also include that option component, and that will become more and more relevant the longer the expiration gets. So we're trying to keep that shorter. Now, we do have plans to introduce much longer term loans in the future that will involve amortization and payments on a scheduled basis. And what those payments will do as they amortize down the loan, they decrease the risk to the lender and therefore should help to also keep borrowing costs lower. So until we have that amortization system, I think it's in everyone's best interest just to keep the expirations pretty short to reduce that put premium component of the price.
Okay, cool. Yeah, I was going to ask about amortizing that as well. That kind of touches on there, so that's cool. And
that's coming with our V2, which definitely I'm not about to give like a deadline for that to be released today, but we're actively working on it. So
okay, cool. Cool. Also, just want to reach out to anybody in the text AMA questions. You do not need to type Pope. Pope does nothing in there right now. Please don't do it. Yeah, it's just a waste of space here, and we're gonna want to try and keep.
I typed Pope and I got a Pope.
Wait, they're set up automatically right now. There's no need
I'm
to.
kidding. I'm just.
These popes.
I did get a question in the text channel though. Perfect. Around SUSHI on Ruler.
Yeah.
So just to touch on that really quickly, we did actually have SUSHI on Ruler when we launched, and we were just experimenting with collateral types and communities. It got some use, but not a huge amount of use, and that's probably more so just around education and how it's different to the traditional type of lenders that we play with today, like Comp, Aave, and so forth. So we are more than happy to put SUSHI up there as one of our primary pairs. To help kind of and help do some of these educational sessions to make sure that people understand how to use it properly and get the best use case out of it. I think SUSHI would be. I personally have SUSHI, so I'd love to see that as a collateral on Ruler. Mm-hmm. And it just gives you an opportunity to continue to kind of farm with those SUSHI tokens without actually having to sell off any SUSHI. You not have to worry about liquidation risks on another platform. can go cross bridge with that very safely because you don't have that liquidation risk. You just have an expiry date. So it does open up a lot of options available for you. No pun intended about the options word just there. But the other thing is that the one thing that I don't think anyone's really looked at or made the comparison is that it'll actually work really well with your Kasashi isolated pairs.
With the Kashi isolated pairs.
Yep.
Okay. Yeah, do you want to just kind of go through that, or how you envision that working, or what you see, or like what you're seeing with that?
The ability to harvest volatility in APY. So because you've got, you can create your own isolated pairs on Kashi.
Right.
Once we have kind of like with the pairs that are already on Ruler, and once we have kind of permissionless pairs, you'll have this isolated kind of supply and demand curve, right, on Kashi versus a fixed rate cost on Ruler. So it gives you the ability to have a hedged position depending on what two collaterals you're looking to use, and then potentially harvest that volatility in the return, in the APY returns. So if you think that, you know, an asset is going to be highly borrowed to short or whatever it might be, you could set yourself up with a hedged position with Ruler as well, and potentially harvest that APY on Kashi.
Okay. Yeah, it's amazing how like diverse we can get with this whole DeFi ecosystem, and it's great that you guys are coming up with new ideas and ways to make this all happen.
The only thing that I'll add is for listing SUSHI, we would love to do that, and we would just need some people to be willing to market make on the order books. So if anyone's interested in how that process would look, what market making entails, definitely send me a DM, and I'm happy to walk you through it.
Cool. Okay, we've got a couple of people here for questions. I'll bring you up on stage. Sorry, I don't know how to pronounce this name. Have you got a question here? And then 27787. It's a random number here. You got a question, or is it just? Oh, hello. You got a question for us there, 277? 277. Do you have a question? If not, I'm going to move you back to the audience. Moving back to the audience. All right. Yeah. Sometimes people just must bump that button by accident. So again, if anybody has questions, please raise your hand and we'll get you up on stage. And if you don't mind, please keep the text chat, the AMA text chat, to questions here, so we don't end up losing some of the relevant questions. So and if you can, please keep it to English, because unfortunately I am only single languaged. So staking Ruler for X Ruler is a game changer. Besides the minted X Ruler, can be used for farming. So do you guys have any specific date for phase 2 protocol fees, which will be shared with the stakers?
Yeah, I started to answer that, but I'll go further into it. So there's a couple of components to that. First of all, we are actively trying to add new revenue sources to the protocol, so that'll get us closer to the point where we're comfortable doing that. But we're also just trying to conserve our protocol fees right now and keep them in the treasury, just to ensure the longevity of the protocol. Like obviously the price environment in the market right now hasn't been so great, especially for DeFi projects, and so it's nice for us to have a treasury full of stable coins to ensure that we can keep, paying devs and people like that for the long term. But it definitely, once we're at a more comfortable position in terms of our revenue compared to our monthly expenses, we would start doing that more and more. Some ways that we're looking into adding additional sources of revenue is we have a lot of collateral and stablecoins locked into our contract every month. And so we could potentially use those to lend on Aave or Compound to earn additional protocol revenue. And we've actually coded that strategy up already. It's just in audit right now.
Cool. Cool. Good to hear. So I just wanted to touch on, I guess, like the tokenomics on Ruler and maybe the X Ruler. I guess we've kind of discussed that a little bit, but maybe if you want to dive into that specifically.
Yeah,
so you go ahead, Ted.
All right, I'll pick up this one because I actually know the answer. So the X Ruler right now for us was kind of a holding piece, right, in regards to being able to reward long-term ruler holders, and have some sort of mechanism for capturing fees, right, and be able to lock that token up. After spending a fair bit of time on researching a lot of the I guess those escrowed models and those X models that are out there, it will get a change moving forward. But those income streams are definitely going to kind of increase. So it's not just going to be the fees, as Cucumber said. So one thing I will be able to say though is that our new token structure will absolutely allow us to. I think I'm confident to say that we will be the first protocol that will be able to deploy idle collateral assets that haven't been rehypothecated. So what that means is that we're not paying the user for that deposit; they are paying for the privilege, right? So that means because they're paying for us to hold it, like a bank does, we can then redeploy those capital assets for our own returns. And the new, which is a vested escrow ruler, will be imperative to the protection of those assets, but also they will receive those returns. So a ruler holder will be able to receive returns, but it's not impacted by the ruler token. It'll use every other token that's idle in our contracts.
Oh, okay.
So at a high level, to describe what we're aiming for with the tokenomics, I mean, we can start from the basics. When we created the token, we obviously set a max supply of 1 million tokens. As of now, about half of those tokens are earmarked to just stay in the treasury for general purpose use. But we're definitely thinking about the long term. Our goal is to build a product that's sustainable without farming of any sort. And kind of my personal vision for that would be if we can get enough market making activity on all the pairs for the RC tokens without farming rewards one day, then we'll have a system where loans can, where you can borrow and where you can lend on our platform. We don't have to use any emissions on that. We have funds that get locked into our contracts that we can use to lend out to increase protocol revenue, in addition to the protocol fees that we charge for the privilege of using our platform. And so, hopefully we can get to this steady state where we have a lot of value locked into our contracts from borrowers who want to post their collateral. And then we also don't need to incentivize the system using ruler tokens anymore. So we'll just have an outstanding ruler supply at that point. And then, ruler tokens that are distributed will be simply to people that are providing value, like devs or community members that help us out and that kind of thing. And we won't need to use tokens anymore for farming. Now, I don't know when we get to that point. I do know that our plan right now, we're rolling out slowly a plan to incentivize market making on the order books. So we will continue to have emissions for the foreseeable future. But our plan is also that to issue less rewards to the order book market making than we historically have done so with AMMs. And I think it's going to work out because I think it's just a lot more capital efficient. But then over the long run, we hope that there will be enough profits involved for the market makers, like pure economic profit from market making, that we can reduce those emissions over time, eventually to zero. Now, personally, I think that it's a ways off for us being able to reduce them to zero simply because of opportunity cost in the market. There's too many projects out there still issuing a lot of tokens as rewards. And so yields are, they've come down a lot, but they're still fairly high, right? And so we're not at a point where pure economic returns would be high enough to compensate a market maker in an environment where they can earn yield farming rewards on other projects. So probably some of it will just take the market maturing for us to truly get to a zero emission state. But that's our goal, is to have a sustainable product, a sustainable market for these loans, and not require emissions.
Very cool. Very cool. If anybody has questions from the audience, please raise your hand. We can get you up on stage and we'll get you asking your questions. Or the text questions there. I don't know if there was, I see something about ruler on Polygon. Is that, I don't know if we've touched L2s yet, have we?
PM very soon.
Very soon. All right.
We're handicapped there simply from the fact that 0x isn't fully deployed there. They've deployed their exchange contracts. They haven't deployed what's called the mesh network, which is a system of nodes that they run that store the state of the order book. And until that is live on Polygon, we've made a decision to hold off. The alternative would have been to launch on an AMM, but we don't want to do that because, as I mentioned before, the AMMs are fairly capital intensive and would require us to incentivize the liquidity.
Mm-hmm.
And one of our main goals right now is to reduce our emissions. And I think this is especially important with the weak price action in the whole market, because yield farming, it's an efficient way to attract liquidity if your project is valued at a very high market cap. You don't need to issue that many tokens and you can get liquidity. But in the current market where valuations have come down across the board, it's not very efficient anymore. And so we're trying to be much more conservative with our token emissions. And so, we figured it's best to wait until we can use order books, which, like I've said, are more capital efficient and require fewer emissions.
Awesome. Yeah, cool. Anybody else? If you got, raise your hand here and we can get you up on stage. But so we just wanted to touch or kind of swing back to options and just like kind of like with Expiry and everything, and how like options and how that's kind of like similar and different to like what you guys are offering. Because when people hear the word Expiry, that's, and lending and everything, that kind of ties the two together here. So just kind of touch on similarities and differences, what you have here, and pros and cons of options, if that makes sense.
Sure. So, the concept behind Ruler is just the concept that has been around for a long time of an asset-backed loan. And in most cases, when you have an asset-backed loan in the real world, whether it's a car or a house that's backing the loan, you can't get that loan called from you if the value of the collateral declines. In fact, in most cases, that collateral is very illiquid, so there isn't a clear market price to begin with. Mm-hmm. So as long as you keep making your payments, you will not lose your collateral. You won't be foreclosed on.
Right.
And so that's the basic premise with Ruler, that we're building out the exact same infrastructure as what already exists in the traditional financial system, but moving it to crypto. So you make your payment, then you'll get your collateral back. So, but what's implicit in this asset-backed loan system then is that there is an option. There is a put option, in fact, because if the value of your collateral goes lower than the amount that you owe, you now no longer have an economic incentive to pay off your loan. In fact, we saw this happen in the financial crisis. In 2008, 2009, a lot of people's homes declined below the value of their loan. Mm-hmm. And so we saw many, many, many people walk away from their mortgage. Now, back then, of course, all loans, at least in the United States, which is what I'm familiar with, they come with a personal guarantee. So in theory, those borrowers still did owe money to the bank. But in crypto, it's much harder to do such a system, and probably not even desirable, right? So with Ruler, if the price does drop below the value, or the value of your collateral does drop below the amount you owe, you can just walk away and not have to worry about things. End of story, right? Mm-hmm. And so what that's done then is it puts that risk onto the lender. So the lender is in fact giving the borrower a put option at whatever that mint ratio is. So we can go through an example. Imagine that ETH is trading at 2,000 and I take out a loan with a mint ratio of 1,400. That means I am obligated to repay 1,400 DAI at the end of expiration. Mm-hmm. Now, imagine that ETH goes down to 1,200 before expiration. Well, it doesn't make sense for me now to pay off the 1,400 that I owe in order to get back $1,200 in collateral.
Right.
So I will just default and I'll keep the $1,400 that I borrowed, or probably slightly less than that in practice.
Right.
So effectively what's happened is I was given a put option for $1,400. So I'm protected if the value of the collateral goes below 1,400, and it's effectively like I sold it at that strike price, what we call a mint ratio of $1,400. And so there is a built-in put option on all Ruler loans by default.
Yeah.
And that put option is like you're selling a put option if you're a lender, and it's like you're buying a put option if you're a borrower. And some interesting things that we've seen is that these options are not necessarily priced properly on Ruler, because you can compare the cost of the loan in interest terms to the value of the exact same put option on Deribit. And we've seen cases where the interest that you're paying is less than the amount of the premium of the equivalent put option on Deribit, which doesn't make any sense, because in theory, you should be paying the option premium plus interest on Ruler. So Ruler interest costs should always be higher than the equivalent put option premium on Deribit. But we've seen many cases where they're not. And so I think that that's just an interesting opportunity for people. And the reason I want everyone to know about this is because we want there to be efficient prices. We want our pricing to be better. And the only way that our pricing will get better is if more people are aware of these economic opportunities. And so, for example, a very simple trade would be, in that scenario, you take out a loan on Ruler, and then you've essentially bought a put option, and then you can sell the corresponding put option on Deribit for more than you paid in interest on your loan, and you effectively have borrowed at a negative interest rate. So that's something to look at. Wow. But there are a lot of those, and I think Ted was touching on this earlier, with DeFi maturing and having a lot of different economic models, there's a lot of cool ways in which you can combine these different models now to either create opportunities or to create the specific risk profile that you're looking for as an investor. So
yeah, wow, this is neat. And with collateral ratios and whatnot, I saw 300%. Is that number correct or relevant?
That was where we started off when we first launched Ruler, but we've since decreased those substantially. Okay. And now it just depends on the collateral. And in our most popular collaterals, which are ETH and wrapped BTC, of course, we have sometimes more than one collateralization ratios for a given expiration to give people different options. I mean, it comes with a trade-off, obviously, right? If you get to borrow more against your collateral, then you're probably going to pay a higher interest rate.
Right.
Same as you can think about it with a mortgage at a bank. Typically, if you borrow at a very high loan-to-value ratio, then the bank is going to charge you additional interest compared to if you borrow at a low loan-to-value ratio. It's the same concept.
Okay, got it. I see there's somebody here looking for a question. See if just invited you to speak here. Sorry, it's a language I cannot speak, but maybe just a mistake there. Okay, I'll send you back to the audience. All good. Anything coming through here on?
Yeah, let me check the text.
Check through here. It's getting messy. We got a lot of. Yeah, please, anybody that's in the AMA text questions, please just keep this to AMA questions related. We don't need to be the SUSHI. We don't need to be putting anything else in there, please. We're just trying to keep this open for ruler-related questions.
I might touch on something that was relevant in the previous conversation, if anyone was on the forum, and that was around our ruler bonds.
Yes, let's touch on that. Thank you.
Yeah, it's a product that we've got kind of sitting in and waiting to be used. Now, just to give background, we developed. It was a concept that we already had, but we rushed to develop it when Rari Capital, their governance token, when they had their issues with their pool, and they lost quite a bit of ETH. So they were looking for ways to raise against RGT tokens without selling the RGT tokens. So we wanted to offer them a solution whereby they could actually lock those tokens up and basically offer, a loan a loan against them. Yeah. So you would raise, you'd still do the same thing. It'd be an RC and RR token. So the RR token would be held on their side. And then they'd sell off the RC tokens, but we could have done that at a fixed rate. So we just said, hey, they want to try and raise and they only want to, spend 10%, on their return, or we could launch it through a MISO auction, right? And let the market determine what that discount should look like for the parameters that are set. So the idea around it is that a treasury like SUSHI or anyone else could raise against their own governance token, and then put to the market the reason they want to raise. You know, is it for development reasons, for continued marketing? You know, what are you using it for, and what are the chances that the funds are going to be repaid? And what that mint ratio is. So what is the economic? You know, is there going to be an economic incentive to pay it back by expiry? And that's kind of we can add more credit criteria to that as they become available. But right now, that's kind of our best economic kind of driver for repayment is that mint ratio before we have anything like, you know, reputational risk or credit data or anything like that to lean on. So it would be a way for SUSHI to kind of access funds for further development without actually needing to ever give those funds up, those tokens up to anyone, and they can come and repay that loan at the set fixed rate and get all their treasury tokens back.
Right. Okay. Yeah, I'm not sure if like that sounds like that would work. I'm not sure if if like that was the. I think like they were trying to, with that proposal, also trying to push for like bringing in institutional investors as well and kind of align incentives, but that doesn't mean that this system couldn't be utilized, as you say, and maybe just directed towards them. Is that kind of make is that right? Or
it could be directed towards them, so you could whitelist those those particular users, right? So instead of actually selling the tokens, you could have it as, well, we just want to raise money. The tokens are yours, and we trust you with the token. You know, we're happy for you to own them if there's a default. But the idea is that we want to come in, you know, either pay back or get the majority of these back. And then you can just whitelist those you know, those wallets that want to interact with those tokens. So that's not a problem either. So you could make it very B2B, whitelisted, or completely decentralized. But what I did think it was also a good product to be able to give MISO some additional use case.
Yeah, no, that's neat. That's a very interesting concept.
So to expand on that general principle, you know, in V2 we are going to add whitelisting to who can borrow. And the reason this is interesting is because what you can do then is you can create your own credit profile or credit score of sorts, where that you let certain people borrow at a much higher mint ratio than other people. Now you can't do that in Ruler V1 because if you open up a market, then anybody with the collateral would be able to borrow, which would be a problem, obviously, because you want to restrict it to only people with, you know, certain credit scores or whatever. So that's something that we're going to be adding in V2. And related to that is we're going to add additional reasons to hold Ruler, in particular X Ruler. And one of those benefits will be that you can borrow at a higher mint ratio if you hold a certain amount of X Ruler. We're still fleshing out how the details are going to work exactly, but we're very excited to be able to add additional value to X Ruler besides just receiving a portion of protocol fees. Another benefit that X Ruler holders will have is they'll have forgiveness on missing payments, so like they can have their payment date delayed. And then second of all, that will reduce protocol fees for, you know, people that hold a certain amount of X Ruler. So.
Okay. Cool. Yeah, there's a lot to digest here, and you guys have a very interesting product.
And that's just what we've got to share with you.
Yeah.
But there's plenty there that we have built and designed, and, you know, we're looking at the next 6 to 12 months.
Right.
That we just can't share with you for a number of reasons.
Well, sure.
But I want people just to understand that if you are interested in Ruler, please join our Discord. We're always there to answer questions. But please be patient with us. A lot of the primitives that we're rolling out, they don't have the infrastructure built for it. So, you know, a lot of the things are designed for AMMs, bonding curves, you know, passive LPs basically, or lazy liquidity, as people like to call it. While we have some very, very elegant designs to capture passive LPs, lazy LPs, a lot of our stuff is for passive participants, and therefore a lot of those rails are still being built out. So we find that when we get to some sort of development, we've got like this infrastructure layer that we've also got to kind of flesh out as well. And while that can be a roadblock or can be time consuming at the start, it makes me super bullish on where we're going because it means no one's gone there yet.
Yeah. Okay.
And like my ultimate goal with this protocol, of course, is to integrate with real world assets. I think that has to be the goal for DeFi. If DeFi just stays crypto native forever, then there's only so much value that can be captured. So, the United States in particular, what we need though is much more widespread tokenization of real world assets. And once that is done, Ruler was built with that in mind, frankly,
Brilliant.
so that those types of assets can be used as collateral on Ruler. And so the long-term vision would be that you can go and you can get a mortgage for a house directly in DeFi. You don't need to go through a traditional lender anymore. You can get a peer-to-peer loan against your house, and you post your house as a tokenized crypto asset collateral on a protocol like Ruler.
Well, as long as I can
So-
use my CBDCs, though, because I really want to be able to use those, especially because they won't be at risk, my at-risk CBDCs. My God. Incredible. Yeah.
Incredible, yeah.
Yeah, incredible. So compared to Aave, for example, lenders take on more risk?
Oh yeah, they take on the risk.
Okay.
So it's definitely more akin to like the traditional finance sector, right? Where the lender will assess a borrower for the risk of, or the risk of default, right? And they will then provide a rate for risk. So this is exactly the same. But the problem is that the lender here doesn't get to assess the borrower directly. They're assessing the market conditions that the borrower is lending against.
Okay.
So let me mention a little something there. I would say yes, as assuming both systems work the way they're designed to work, definitely there's more risk on Ruler, but Aave does have a risk that Ruler doesn't, which is a true liquidity crisis where liquidations can't occur fast enough to obtain enough funds to make the lenders whole. In which case, in such a drastic scenario, it's possible for Aave lenders to lose. Now, what would happen in the equivalent Ruler scenario is, yes, you would lose in US dollar terms, but you would still get the exact same amount of collateral as you always knew was collateralizing your loan. So it's a little bit more straightforward what happens. But yeah, I mean, in US dollar terms, you can certainly lose a lot in Ruler if the value of the collateral declines. But what will not happen, and this is why a platform like Aave needs to be very careful with which collaterals are listed, is if there's a very sharp drop in market prices of some of the riskier collaterals, you can end up with the entire system being under collateralized in Aave, right? And that doesn't really exist in Ruler in the same sense because each pair is isolated from all the other pairs, if that makes sense.
Yeah, and again, where you've been tying that towards Cashi as well, and this with the isolated pairing and everything.
Right. Yeah. And so that was a design decision that may be better, may be worse, depending on your perspective.
Right. Why the name Ruler?
So we can thank Crypto Pumpkin for the name Ruler. Basically, the idea was that you follow the rules and you don't get liquidated. Simple as that.
Yeah. Well, you kind of got one rule, right? And that's pay before expiration.
Exactly.
And that was kind of it. It was, I mean, the first name originally was kind of ammo for like kind of amateurization, but this just kind of had a better ring to it.
Cool.
And but yeah, definitely in line to look at rolling over those real world assets onto a tokenized platform and be able to lend against them. I think there was a question in there about how we see tokenized deeds existing in the future. Yeah, I do think it'll be akin to like a USDC Circle centralized. You're going to need something like that to start off with, because we're going to go from a centralized government entity or whoever controls that in your jurisdiction around deeds and so forth to kind of like this decentralized model. So I really don't see any of that existing until we've got kind of like ZK rollups and stuff where private information can be kind of done off chain, and then all that computation can then just be finalized and settled onto Ethereum L1 to allow privatization and stuff of that data. So I still think it's a little while away, but it's not as far as people think.
Let me add to that, Ted. Sorry to interrupt.
You're right.
Yeah, so I see a vision for how it can work for commercial assets in the United States, in particular commercial real estate. I think where it's going to be a lot harder is with smaller residential property. With commercial assets, you can tokenize the ownership of a legal entity that owns the underlying asset, and then those tokens, that tokenized ownership can be used as collateral on a system like Ruler. So it effectively becomes a security token. What you need, though, is a way of making sure, in order to stay regulatory compliant, that the people that borrow against those tokens and ultimately own those tokens are accredited investors. And so that's going to require a little bit of additional infrastructure. And we hope to provide that infrastructure in V2 so that becomes possible.
Got it. Okay. Yeah. Yeah. Regulation and everything is going to be key with that. Yeah. Also, just want to mention with the undefined with the popes. Sorry, I keep going back to these dang popes here, but that means that we ran out of popes. So I thought I uploaded the correct thing here. So what we'll do is after the show is over, we'll just ask anybody that did not receive a pope to just stay in the audience, and we'll try and get you sorted. There's no need to stay in if you got one, because when I resend them, you'll only be able to get one anyways. So we'll talk about that afterwards. I don't want to take up more time of the show here with that, but if you didn't get a pope, just stick around. Might take me a little bit, and we'll get you one afterwards, okay?
Make sure you do stick around, because we're going to deliver something to pope holders.
Oh. Very groovy. Good alpha leak. Good alpha leak. Okay, what else have we got here in the questions? Credit score. That was just answers, right? Credit score stuff.
I tried to answer that.
Yeah. Okay. Cool. So the credit score will be integrated with X-Ruler Holdings. Yes, you will get staked ruler / for not repaying. So that's answered there, but maybe should we discuss that here quickly?
Yeah, so we're still working on some of the specific mechanisms, but the way it'll work is you'll stake your X ruler, and then over time you will build up a credit score as long as you keep that amount of ruler staked for paying your loans on time. And then if you don't, and by building up that credit score, then you will gain access to things like higher mint ratios that we described before. And then if you don't pay off your loan on time, you'll not only get your credit score reduced, but you also get some of your staked X rulers flashed. And the tricky thing about credit scores are that unless you're doing KYC, which we want to avoid at all costs, there are many sorts of exploits where you just create multiple wallets to reset your credit score after you just defaulted on a loan that you shouldn't have, right? So there needs to be economic disincentives to these defaults as well. And so I view this as a repeating game theory problem, where you need to make the solution to pay off the loan, even when the short-term solution is to maximize your short-term profits, you would not pay off the loan, because you know the expected repeated future benefits will be greater than the cost to you to pay off the loan right now. And so we need to design an economic scenario that has those principles, right? So there needs to be sufficient penalties to you in the future for not paying the loan off, that you will pay it off in the short term. And so that's the mechanism that we're aiming for here. So
cool. Anything further here in the concerns towards X-Ruler price manipulating? Yeah, I was going to ask about the concerns towards X-Ruler price manipulation causing the credit score to profit a borrower more than their loss would be from slashing. So yeah, you kind of just discussed all of that, I think. Hey.
Yeah, when we release the specific mechanisms, obviously we will want feedback from the community to, try to come up with some sort of exploitable behavior. That's just part of the process.
Okay,
cool.
So,
I believe that in DeFi, you have the risk of, your code being unsound and having that type of vulnerability, but sometimes the economic vulnerabilities are the worst ones.
Okay.
So.
Okay. Anything further here in the text questions that we haven't captured yet? Why did you choose to make the logo an R instead of a stick?
I blame Pumpkin.
Pumpkin, there it is. Summarize your current phase in development, what is being done and things yet to be done. You've kind of touched on a variety of things that where you're at and what's going on. So yeah, I don't know. I think that's kind of capturing everything there. I mean, we've covered a ton of stuff. If anybody's got questions in the stage that we're in the audience that wants to come up on stage and verbally ask, please feel free. Or any last questions here on for ruler related, not Pope related. I'm gonna have to start a POAP channel or Pope channel here just for Pope separately.
Yeah, look, I'll hang around in the AMA channel anyway.
It will. We'll discuss.
If anyone's got questions over the next 24 hours, I'll be monitoring that.
Yeah,
for the next 24 hours,
wicked.
Yeah.
But yeah, anybody else here with any final thoughts? Anything else that you guys want to share? Cucumber or Ted? You guys have
I just want to again, just tell the audience, anybody who's interested in market making using the order books, please let me know, and I'd love to help you get started. We consider that to be one of the most important things that we're looking for going forward is a way to get more liquidity on those order books.
Cool.
So,
any size recommendations or limits or sizes that you're looking for market makers?
No, we'll talk to anybody of any size, just anybody with interest. But yeah,
I'm coming there with 0.1 of an ETH. You gonna talk to me?
Yeah, we'll
still talk to you. I'll still talk to you.
We'll still talk to you. Look, the key thing here is education.
Right. No, that's great. That
doesn't matter how much it is. We want to educate, right?
Yeah, cool.
The more that we educate everyone else, then over time they can educate the next person, the next person, the next person. So
perfect.
That's probably the big importance. So if you really want to come and learn how to use it, we're absolutely there for you.
Very cool. Very cool. All right. So we've touched enough on the popes here today as well, and we'll stick around for those. Anybody that didn't get one, please stick around. We'll get you sorted. You guys' socials and how to connect with you guys, all of that. Is it all on your website? If you go to, is everything there? I'm really trying to push the people going to websites instead of trying to post links or something that might have a typo and potentially scammers and everything. So is everything on your website?
Everything is on the website.
Perfect.
So you've got access to all of our socials, forum, voting, docs, audits.
Awesome.
All of our subsidiary UIs as well for cover rules for the order books and for swaps for the Metapool factory, and then we've got multiple UIs. So depending on what level of or what skill level you're at, we've got a UI that allows you to kind of just put up a quote like a Uniswap quote or SUSHI swap quote. Mm-hmm. We should say SUSHI swap.
Yes, that's better.
And but it's it's what you're used to, right? It's just a quote. I want to borrow against 1x, 1 Bitcoin. This is what your best rate will be, right? But the beautiful thing about our light UI is that if you don't like that rate, you can actually select your own, and then it will still put your order in the order book.
Cool. Okay, and your guys' website is rulerprotocol.com. Is that correct?
Yep. And app.rulerprotocol.com to actually access the application.
Yep.
Wicked.
Yep.
If you want to reach me personally, I'm not very active on social media, but I'm active on Discord, so feel free to message me.
Wicked. Okay, we do have Nimbus and Big Papa Pamp. Oh, there's Nimbus. Nimbus, I'm going to get you up here quick for one final question. Nimbus, have you got a question for them?
Hi, can you hear me?
You bet.
Yeah.
Great. I just want to ask if I can get more detail on how you guys are looking to expand outside of the Ethereum network, because currently it's not much of an issue anymore because the gas prices have fallen quite a bit. But I'm wondering in the future if we get a huge bull run like the last one we saw, and then we get confronted with all the congestion on the main network. Do you have plans to expand outside of that?
Sure. So yes, we're already on BSC using Nerve pools as opposed to Curve Meta pools. Our next expansion will definitely be to Matic, Polygon. We're waiting there for 0x to deploy their mesh network. And if that doesn't get deployed in the next few months, we'll probably build our own mesh network to replace it. So definitely BSC and Polygon are the two most important ones on our radar right now. But we want to be chain agnostic ultimately, so we're going to go wherever the users are. But we are really pushing the order book model. So a chain that doesn't have a working permissionless open open order book protocol is going to definitely be a roadblock for us to move there. So
Awesome.
Sounds good. Yeah. I think a lot of us are on BSC at the moment, but also there's a lot of people on Polygon, so that's what I was ultimately wondering about.
yeah, we definitely are excited to move to Polygon. Right now, we're just, like I said, we just have that roadblock, but I don't see it taking more than a few months. We've applied for a grant there, and the Polygon team, they've expressed interest in helping 0x specifically expand their infrastructure, and helping both our project and 0x to make that integration happen. So
Excellent. I look forward to that. Thanks.
Thank you.
Awesome.
Thanks, Nimbus.
I'm done here. You can take me off the stage.
Cool, you got it. Thanks. We got one other one here that, again, is the characters that I am unable to read. Are you able to accept my invite? 5, 4, 3. Oh, hello. You got a question? Nope, they're gone. Okay. Yeah, I think we're there. I think we've wrapped up here. That's an hour. So, hang on one more time. We're going to try this. Okay, one more time to ask question here. I don't know how to pronounce that name. So 5, 4, 3, 2, 1. No. Okay. All right, rulerprotocol.com. That's where we can find you guys. All your socials are on there to connect with whatever medium you need. And yeah, thank you guys so much for coming out, and everyone that's been a part of this. This has been recorded and is going to be up on the YouTube official, the SUSHI YouTube, the official SUSHI official YouTube channel. Jeez, took me a minute there. So that'll be up there, so you can check this out and refresh yourself with all of the information that came out of this. So find me on Twitter at 0xtangle. And we will talk to you guys on the next one. So thank you again, Cucumber and Ted. Appreciate it coming out.
Thanks for having me.
Thank you, Tangle. Appreciate it.
You betcha. All right. Thanks, guys.
See you guys.
guys,
Bye.
thank you.